What if I told you that while everyone is chasing hype stocks and pouring money into crowded trades, there are tiny defense-related companies under $5 quietly positioning for a breakout? Not next year or someday in the future, but potentially much sooner than most people expect. Analysts are calling this a global defense supercycle, a multi-year wave of military spending that could reshape entire industries, yet most retail investors are still ignoring it. They are busy chasing headlines and following hype while smart money slowly rotates into defense-related sectors. The opportunity is forming quietly beneath the surface of the market, and very few people are paying attention right now. Now let me be clear, we are not talking about safe blue-chip giants like Lockheed Martin or RTX Corporation. These are micro-cap stocks that are small, volatile, and often overlooked by the majority of investors. They can explode 50% or 100% on a single headline, but they can also crash just as fast without warning. That is exactly why understanding the story behind each one separates smart investors from gamblers. Information, timing, and discipline matter more than anything else in this space. And without them, most traders get wiped out quickly. Because in this market, everything depends on knowledge and timing. In today's video, I will break down 4 defense penny stocks with unique catalysts tied to global demand and geopolitics. I will reveal each name at the end of its segments, so you stay focused on the story. Make sure you watch till the end because the last one might be the most explosive of all. Let's get started. The opportunities in this space are not evenly distributed, and patience will matter here. Right now, global defense spending is rising due to ongoing conflicts and geopolitical tension. Countries are increasing military budgets by billions and sometimes even hundreds of billions of dollars. This is not a short-term trend but a long-term structural shift in global priorities. Money is flowing deep into the defense supply chain as governments modernize their forces. This creates opportunities not just for large contractors but also for smaller hidden players. And that is where investors often miss out. When people think of defense stocks, they usually only think of big names dominating the industry. But historically, small-cap defense companies often outperform during the early stages of a cycle. When capital flows into a sector, it eventually reaches smaller companies and amplifies their moves. This is where the real explosive potential comes from in early cycles. One contract win can completely change a company's trajectory. And that is what makes these stocks so interesting. The first company operates deep inside the aerospace supply chain. It manufactures structural components used in military aircraft and supports major defense contractors. Without these parts, fighter jets and aircraft cannot function properly. Recently, demand for aerospace components has increased due to aging fleets and modernization programs. However, the business is highly dependent on contract timing, which creates unpredictable results. One quarter can be strong while the next can be weak. This creates both opportunity and risk for investors. CPI Aerostructures is the first stock with ticker CVU. Now let's move to the second company in a completely different segment. This second company operates in ammunition and defense-related demand. When global tensions rise, ammunition demand spikes rapidly instead of gradually. That creates strong short-term trading opportunities. Over the past few years, demand has surged from military, law enforcement, and civilian markets. However, the industry is highly influenced by politics, regulations, and global events. That makes it extremely volatile. This volatility creates both risk and opportunity depending on timing. Outdoor Holding Company is the second stock with ticker POW. Now let's move to the third company. The third company operates in the security and survival space. It sells tactical gear and personal protection equipment. It is not directly tied to military contracts but reacts strongly to fear and uncertainty. When markets become volatile or headlines create panic, demand for these products increases quickly. Low float structure can also amplify price movements dramatically. This makes it extremely volatile in both directions. It is not beginner-friendly, but it is worth watching. American Rebel Holdings is the third stock with ticker AREB. Now let's move to the final company in the list. This final company operates in advanced defense materials. These materials are used in aerospace, electronics, and protection systems. It sits deeper in the defense ecosystem at a more fundamental level. Modern warfare is increasingly dependent on advanced materials and engineering. Lightweight and high-strength components are becoming critical for next-generation systems. This positions the company in a high-growth niche. The upside comes from long-term adoption and future contracts. CPS Technologies is the final stock with ticker CPSHE. Now let's wrap everything up. None of these stocks are safe investments and all carry significant risk. They are highly volatile, speculative, and unpredictable in nature. But in markets, risk often creates opportunity. News, contracts, and global events can change everything overnight. Smart investors manage risk, control position size, and stay disciplined. Because surviving in the market is more important than quick gains. The winners are not the ones who get lucky, but the ones who stay consistent. If you enjoyed this video, I can show you more defense stocks under $10. Or even hidden eye defense plays that institutions are quietly accumulating.